Welcome back to Quantreef.com. Bitcoin sitting right around 63,000 for 18, tucked in a tight little pocket between session VWAP and a well-defined liquidity wall just above. That makes this a good spot to slow down. We'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where price is most likely headed over the next several hours. Price is at 63,000 for 18, and honestly this reads as neutral to slightly cautious. The trend layer on the grade card is middling, the macro regime is flagged risk-off, and reach odds actually lean lower over the next day. Nobody's really in firm control here. We're inside a range, chopping between a swing high near 63,617 and a swing low near 62,240, with neither side pushing a clean break yet. Price is hovering just under session VWAP at 63,473, which is a mild bearish tell on the short term. It means the average trade today is still a touch better than current price. The two anchored VWAPs off the recent swing high and low sit close together around 63,353 and 63,165, both just below spot. That tight cluster suggests balance rather than conviction. Traders want a decisive move away from this zone before trusting a direction. The heat map shows two clear pools bracketing price. Above, there's a strong wall around 63,908, with roughly $2 billion of notional resting there. That's the nearer pool, and reach odds put it at 55% over 24 hours. Below, a bigger pool sits near 62,000 for 44, closer to 2.8 billion, though less likely to be tapped soon at 41% odds. Markets tend to drift toward these thick pools because stops and liquidations cluster there, and once they're swept, price often snaps back the other way. On screen right now, resistance above is the 1-hour swing high at 63,982, then the stop-loss level at 64,366. Below, support comes in at target 1, 63,023, then target 2 at 61,777, and target 3 at 60,821. Given the tighter cluster above, that swing high looks like the more contested test first, and stops are likely stacked just past 64,366. A break there invalidates the range-bound read. Above price, there are two 4-hour bearish gaps, one between 64,012 and 64,172, another higher up near 64,500 to 64,669, both completely unfilled and with a high revisit rate near 87%, so they act like magnets on any upside push. There's also a daily gap way up near 67,500 to 70,687, but that's a longer horizon story. Below, two 4-hour bullish gaps sit close to price, one right under 63,344, nearly untouched, and one just below that's already mostly filled. Both carry high revisit odds too. The current 4-hour swing runs from a low of 62,240 to a high of 63,617. Price is sitting inside that range, closest to the 0.382 retracement around 63,091. That level's acting like a soft floor right now. If price extends higher, the 1272 extension near 63,992 lines up almost exactly with that liquidity wall we talked about, worth watching for confluence. The card prints N81, HTS 53, and that gap tells the story. Readiness is decent, but the trend score itself is only middling. Volume and liquidity actually score strong at 83, institutional positioning is healthy near 68, but macro regime is weak at 33 and order flow sits low at 34. That's a real disagreement between layers, strong liquidity and positioning against a soft macro and order flow backdrop, which is exactly why the overall grade lands as neutral rather than leaning either way. Retail traders are 65.9% long, top accounts are similarly long at 66.2%, and top trader positions sit at 61.4% long, so everyone's leaning the same way, long. But the 4-hour taker flow is almost dead even, 49.6% long versus 50.4% short, with about 2.88 billion on the long side against 2.92 billion short. With that much one-sided positioning stacked long, a squeeze lower that clears out longs looks like the more likely stop hunt scenario. Given the setup, the wall at 63,908 looks like the first rail magnet. It's close, it's got size, and reach odds favor it over the downside pull in the next day. If buyers push through it, the 1272 fib extension near 63,992 and the unfilled 4-hour gap just above it become the next targets, with resistance stacked out towards 64,000 for 20. If sellers take control instead, the sweep towards 62,000 for 44 becomes the story, tagging the deeper liquidity pool and potentially resetting that heavy long positioning we just talked about. The bullish case wants confirmation on a clean break and hold above 63,908, invalidated back below the anchored VWAP zone near 63,165, with the risk framed against that swing structure. The bearish case fades a sweep of that same wall, entry documented near 63,908, stop at 65,122, targeting 63,023, then 61,777, then 60,821. The long side's entry and stop are published too, near 62 for 44 with a stop at 61,258, target stack back up towards 63,908. So we're really at a decision point. Whichever side clears its liquidity pool first probably sets the tone for the next several hours. If this kind of layered read is useful, give the video a like and subscribe, and know that quantreef.com runs this same 9-layer structure, probability, and liquidity breakdown across more than 100 coins, with a 7-day trial if you want to dig deeper. As always, this is for educational purposes only and isn't financial advice.